Hello again, this is Robert Schein, Managing Director and Partner of Blanke Schein Wealth Management. Today is Tuesday, October 6th of 2020. We're going to bring you the headlines that are moving markets, what markets are paying attention to, so we're going to pay attention to it as well. We're going to report on it because you might not get that in your news cycle at the end of the day today, so thanks for watching. So our first topic of the day, our yields are moving. Yesterday we saw the 10-year Treasury jump up, highest level that we've seen in terms of a jump move since the middle of the summer, June 9th, as a matter of fact. So we're at the 76 basis points level for the 10-year Treasury, and it's much higher than it was last week. This is a short-term move. You know, sometimes when interest rates move or yields on treasuries move, they make a breakout and then they'll come back and consolidate. But right now, it's a positive sign because it's showing signs of growth in the U.S. economy. Therefore, yields are playing catch up to stocks. And so that's the first indication. We're going to report it. That's one of the reasons why we saw movement in financials yesterday as well, because the yields were up. So on a short-term basis, that's a positive move. That means that Fed policy and a few other things in terms of stimulus and even stimulus talk, again, people are speculating that we could see a CARES 2.0 Act, and there was another reason why the market was up yesterday. So you put all those factors together, markets and economies are moving in the right direction. So yields are up on that. Let's continue to watch that as it's a good backdrop for the U.S. economy. So today is Technical Tuesday. What I'm talking about very specifically is, you know, we talk about technical strategy, investment strategy. We talk about policy research, economics. I bring you sort of research from all across the board as we at Blanke Schein Wealth Management scour that information for you to report. Today is Technical Tuesday, and I'm talking about the S&P 500, and it's a reverse head and shoulders. Rob, what the heck does that even mean? From a technical perspective, traders look at patterns within the S&P 500. And in the case of a head and shoulders, ultimately that means that the market goes up and then it goes up a little bit more and then it goes down on the other side. That is a head and shoulders. Ultimately, that's not a good indication as it relates to a market you want to be in. Because in the short term, it shows sort of you climb the mountain, you go up, accelerate, and then you come back down. But ultimately, that starts at sort of the backside of a mountain. In this case, let's call it the S&P 500, and that would mean that the backside of the mountain would mean a long-term trend playing out of negative sort of price action. This is a reverse, meaning we saw markets go up, down, and then they're back up a little bit more on the head and shoulders pattern on the reverse side. That's what technical traders are calling it. And we're seeing the S&P 500 break back out to the 3,400 level. That's huge because that just means that markets are persisting higher, consolidating as I've reported before. And let me talk about the consolidation. We're continuing to see that play out. As I said yesterday, we saw financials sort of catch a bid because of yields. But if you take a look at the markets, active versus passive. Now here at Blanke Schein Wealth Management, we are an active money management shop that's customized to our clients' investment needs and ultimately their financial plan. So we customize our wealth management and our portfolio management, and we marry that to the financial plan. And passive just means you buy the S&P 500, set it and forget it, and you're good to go. Well, research can show over time that one's not better than the other. In fact, we subscribe to sort of both, layered both, active versus and active and passive in our clients' portfolios. But that being said, this is the year 2020 that we're seeing a divergence, meaning that an active portfolio is outperforming a passive portfolio. So the set it, forget it strategy of just buying the S&P 500, you're underperforming if you don't have an active strategy. Here's what I mean. I've basically categorized in terms of today's research piece, we got this from Strategis, and they basically categorized the relative and absolute performance on both sides of the 11 sectors of the S&P 500. And in this box category, we're actually seeing significant absolute outperformance as well as relative outperformance of several different sectors inside the S&P 500. Let me read this for you because it might be a little bit small for you to see, but we've got significant outperformance here on industrials, materials, consumer discretionary, consumer staples, communications, technology, and healthcare. Right? There's a lot of reasons for a lot of those things that are moving, sort of technology. We know that we had technology pulled forward, and everyone's using technology, especially in 2020, a lot quicker and faster than they ever thought. So there's no it's not uncommon to see the technology would be outperforming. But we're also seeing materials and industrials and a few others, consumer discretionary, that are outperforming, which is interesting, right? People can't consume because they can't go outside because of COVID. Well, consumer discretionary, meaning extra money you have to spend besides just your staples of just the basics that you need, that's outperforming too. That just shows it's a sign of a healthy economy as well. If you own and overweight these sectors, you're going to outperform just an S&P 500 index fund. Because S&P 500 index fund has utilities in it, financials, energy, and real estate. So that's sort of holding everything back and holding everything back. So active versus passive. This is that year where we see both an absolute and relative outperformance on S&P 500. We can take this across all different indices, but the pattern is going to be true to form as well as so active is beating passive for 2020, and that's persisting. So those portfolios are doing a lot better. So that's what we're doing here at Blanke Schein Wealth Management for our clients. We're actively managing our clients' portfolios, and now you can see the reasons why as it relates to sector bases. Some sectors do better over others, and some sectors are positioning for election. And we've talked about this before, the election edition of our portfolio positioning, there's also some themes that are playing out here, like healthcare and a few others, that are betting on certain outcomes as it relates to the election itself. So we're seeing this divergence, we're seeing this outperformance relative to, as well as absolute, but the theme here and the take-home point is active is beating passive for the year of 2020. So thanks for watching. I hope you learned something today. Again, like and subscribe. Tell a friend, and we appreciate it. This is our daily update, and thanks, and have a good day.